Welcome to the She Builds Show. I'm your host, Stefanie Olson, a licensed general contractor who builds new construction, renovates, and designs your vision. Today, more than ever, we need raw, authentic women who are willing to rise above society's norms, break those glass ceilings, and encourage each other to boldly build the life we were meant to live. So, honey, what are you building? Welcome to the She Builds Show. I hope you're having the most fabulous day and truly take time today to find something to be grateful for. Gratitude can change everything. So be grateful even in the tiniest things. So today I want to talk about your taxes and the financial picture of a small business. For the last 15 years or so, this time of year, I would normally be neck deep in preparing taxes. It's weird for it to be February and have normal hours of work and be outside enjoying the sunshine. I don't think I've ever seen so much green grass. This is something I am so grateful for, to be just outside when normally I can't even tell you how many years I would be inside. So today I want to break down my top 5 best advice for the financial part of your business and how to get ready for tax time without a huge, giant headache. So the first thing I want to talk about, and when anybody ever came to me and they were going to start a business, this was one of the first things I would tell them: get a separate bank account. If you are running a legit business, you cannot commingle your personal funds with your business. This should be right up there with getting your business license. Step 1. You need to have a separate bank account for your business activity. Once you have this, you need to respect that account. Do not pay for personal items out of this account. Do not. Do not buy groceries from your business account. Same goes for your personal account. Do not pay for items out of your personal account that are for your business. And here's the best reason why I could tell you this. If your business gets audited and you have commingled your funds into your personal account, you have to give the auditor access to your personal account. And in my opinion, I would not want to hand over my personal bank account information if I don't have to. Keep it separate. Be diligent about this. I know it's frustrating and inconvenient, but plan the month ahead. Transfer money, pay yourself into your personal account for your personal expenses. Do not commingle. This is probably, if I could tattoo this on your forehead, I would. Do not commingle. Your CPA will thank you. You will thank you. Okay, I'm done with that one. Number 2, track your expenses on a monthly basis. If you are running a business and you have no idea what your bottom line looks like until you do your taxes in March for the previous year, you're doing it wrong. You need to know on a monthly basis what your net income is. You can do this in 2 ways. If you have a super small startup business, then my suggestion is just a spreadsheet. Just use Google Sheets or Excel and enter all the expenses on the left side for the month. And then you have categories at the top to categorize them. So let's say you bought paper at Office Depot. So you would put the date, Office Depot, on the left side, and at the top, the item would be listed, and you'd have a category for office supplies, and that's where the amount would go. This will make preparing your taxes so much quicker because at the end of the year, you just need the total of that office supply column, and you don't have to go back to all of your bank accounts and your bank statements. So if you have a more sophisticated business, and you're using QuickBooks, then you need to be reviewing this information every month. You need to review your profit and loss. And I'm going to go into that in a little bit. But knowing what your business is doing, even if it gives you anxiety and you don't feel like you're a numbers person, you cannot ignore the numbers. You have to know on a monthly basis. They tell you everything. Okay, so I need you to know the difference between gross profit and net profit. When I was a kid and my dad was teaching me this, it was just this foreign concept and I could never grasp it. So I'm going to try to break it down as super simple as possible for you. So gross profit. It is gross and disgusting. It is a number that tells you a lie. Okay. It's the number that you look at before any expenses. It's gross. We don't like it. So for example, in my life, gross profit is what I sell a house for. It's a lie and it's gross because I have a crap ton of expenses that I had to pay for to build that house. It's not my real money. It's gross. Okay, got it? Now, net profit is the number we want. Net income, net profit, same thing, is how much money we really made. Net profit is your income, your gross income, minus all of your expenses. So for me, my net profit in building a house scenario is how much I sold the house for, minus how much it costs me to build it, minus how much it costs me to run my business. So rent, employees, etc. Net profit is the number we want. And guess what? We want that number to be positive. We want it to be in the green. We don't want red net income numbers. That's called a loss. So you need to know your net income on a monthly basis. You need to track this number constantly. A lot of people just get confused and they go, oh, I made $6,000 this month, but that was their gross profit and they have no idea what their net is. So your net income needs to be tracked monthly. Okay, this is number 4. What is a profit and loss statement? Super simple. It's a sheet of paper that shows you your net income. It's the details of your gross income minus your expenses and operating costs that comes to the bottom line and shows you your net income. It shows if the business is making money or not. Don't be scared of a profit and loss. It's simple. Let's say you have a cake company. Your profit and loss statement would look something like this. Your gross income would be how much you sold the cakes for to the customer. Next, it would show your expenses, how much you spent on the ingredients to bake the cake. And then your final number would be your net income. How much did you make on the cake? These numbers are so important because they help you make the right decisions. Should I charge more for my cakes? Should I find cheaper ingredients? Is my kitchen rent too high and killing my net income? The numbers help drive your decisions. And if you don't know the numbers, you can't fix the problems. So number 5. Now, the other more complicated one that most people get super confused about is their balance sheet. A balance sheet is made up of 3 categories: assets, liabilities, and equity. Assets are things you own. In our small business cake example, the asset would just be the bank account. It shows the balance. How much money do you actually have in that business account? Other assets could be cake equipment, the mixer you purchased, and the van that you use to deliver the cakes. All right, so those would be your asset column. Next, it would show the liabilities. It would show any credit card balances that you have. Those are liabilities. Liabilities are just a term for who do you owe money to. Now, it would also show the balance of the loan on the delivery van. Does that make sense? So you have assets, liabilities. So assets are things you own. Liabilities are people you owe. And then finally, equity is what's left over. Are the things you own worth more than the people you owe? You always want your assets to be worth more than your liabilities, right? You don't want to go purchase a van and basically owe 100% of that. That's why we put down payments on things. That's why we pay things off. So that's a balance sheet in a nutshell. It's actually easy. Don't be afraid at looking at your balance sheet. It's a snapshot of your business and the things you own and the people you owe. That's it. Now, you're making sure you have a separate business account. You're tracking your numbers every month. Then when it comes time to prepare your taxes, it becomes so much easier. Now, all your business tax return is inputting your gross income, your expenses, your assets, liabilities, and equity in a super simplified nutshell. There's a lot more things that go into it for an accountant to help you with your tax liability. But as a business owner, it's helpful to see the big picture and understand that where these numbers end up and why it's important to track them. It's also helpful when it comes time to preparing your tax return that you have already tracked all of these numbers on a monthly basis, because if you are noticing that your net income is really high and it's much higher than last year's, you won't feel so angry and upset when your accountant tells you how much tax you owe because you've been in the numbers, you saw the signs. So dig in, look at the numbers, block off 2 hours every month to organize and get familiar with financials. Don't leave this for later. Do it now. You got this. Thanks for joining me today on the She Builds Show. My name is Stefanie Olson. My hope is that this episode leaves you feeling empowered and ready to boldly take that step into building the life that you envision, 1 2x4 at a time. And if you can do me a quick favor, please leave me a 5-star review on iTunes. I get giddy over reading the reviews each week, and I will choose one special person to win some She Builds swag. Make sure you add your name to the review, and I'll reach out if you're the winner. Thanks again for hanging out. Be sure to visit me at theshebuildshow.com, where you can ask me questions and share with me what you're building.